Welcome back to Everything Tesla Stock, everyone. Are you curious about the true state of affairs in the world? Concerned about what may occur within the upcoming months or years? Check out Cathie Wood's most recent update. One of the most important stock research specialists of our day, she serves as the CEO and Chief Investment Officer of ARK Invest. She is an authority on all things financial and economic, and she has made some very catastrophic predictions regarding the stock market. She claims in this gripping video that everyone will be afraid throughout the next 2 weeks and that we are already in a recession. Recession warnings have been multiplying in the last few weeks, but most of them have a 1 or 2 year timescale. It's imperative that you get started on your preparations as soon as possible if you haven't already. I hope she is mistaken in her prediction. Make sure to stay to the very end if you want to hear what she has to say. Then let's listen to what she has to say. To stay informed about all things Tesla, before we get started, please hit the like, subscribe, and switch on notifications buttons if you enjoy this kind of content. Wood, one of Wall Street's most outspoken backers of Tesla, is the CEO of ARK Investment Management and the manager of several exchange-traded funds with an innovation theme. One of the best investments in the ARK Autonomous Technology and Robotics ETF is Tesla shares, which also ranks second in the ARK Innovation ETF and fourth in the ARK Next Generation Internet ETF. All told, the funds own almost 1.3 million Tesla shares, which are currently valued at $911 million. This stake has decreased from a peak of approximately 5.6 million shares as a result of the general tech sell-off, allowing Wood to realize some early profits. But thanks to the latest split of Tesla's shares, ARK now holds more than 1 million shares. Although the majority of investors fear that the United States will experience a recession in 2019, Cathie Wood, the founder of ARK Investment Management, thinks that one has already occurred and will end by then. Many strategists and economists disagree that the U.S. is in a recession and think it will start next year, but we actually think we'll be coming out of it in 2023, the spokesperson stated. On Tuesday, Wood stated, "We think we are in a recession." On CNBC's Squawk Box, "We believe that inventories, which I have never seen rise this much in my career, are a major issue. I have 45 years of experience." Wood said that higher than expected inflation is being caused by supply chain disruptions and geopolitical threats. "We were wrong on one thing, and that was inflation being as sustained as it has been," Wood stated. "The supply chain is shocked that it has taken more than 2 years, and naturally, we were blind to Russia's invasion of Ukraine. Though it has created conditions for deflation, inflation has been a greater issue. Though we don't expect it will resemble the systematic recession and financial crisis of 2008 to 2009, we do believe we are in a very severe inventory recession," the spokesperson stated. "It'll be more of a garden variety. The Federal Reserve Bank of San Francisco conducted a research in 2008 and found that, from the mid-1940s to 2007, the average length of a U.S. recession was 10 months, with the shortest recession lasting only 6 months. According to the Consumer Price Index, inflation increased at its quickest rate since December 1981 in May, up 8.6% over the previous year. Wood claimed that sentiment data, which has fallen to all-time lows, shows that consumers are feeling the effects of rapid price increases. She referenced data from the surveys of consumers conducted by the University of Michigan, which indicated a reading of 50 in June, the lowest figure ever. Using the recent shift back into growth stocks as support for his claim that innovation is recession-resistant, Wood pointed out that these companies are growing at better rates than the overall market, which is often more impacted by the cycle. The well-known investor has had a challenging 2022. As interest rates rise, her disruptive technology darlings are among the biggest losers of the year. The principal actively managed fund, ARK Innovation ETF, has had a 52% decrease thus far and a 66% decline from its 52-week peak. Although the fund saw a 13.2% gain in July, this year has seen considerable losses. The fund fell more than 5% on Tuesday, bringing its year-to-date loss to almost 49%, according to Faqts data. These financial statistics do demonstrate that we are currently experiencing a recession. We believe that this recession is being driven by inventories, and I believe that is becoming very evident. Advertisers are drastically cutting back. According to Wood, advertiser spending on Snap and Meta platforms has undoubtedly decreased recently, according to recent corporate reports, and Walmart and Target have issued warnings that excess inventory may hurt their profitability this year. However, Wood asserts that her clientele is largely loyal to her, and that, in fact, additional money is pouring in as investors look for diversification during a bear market. Faqts reports that ARK took in inflows above $180 million in June. I think that inflows are happening because our clients have been diversifying away from broad-based benchmarks like NASDAQ 100, Wood stated. Our entire focus is on disruptive innovation. Problems are solved via innovation. This year, major U.S. stock indexes have also declined. Up until Tuesday, the S&P 500 had lost 13.5%, the Dow Jones Industrial Average had dropped about 10%, and the NASDAQ Composite had lost more than 20% of its value this year. Although the July CPI data may show a modest increase, decrease, or flat trend, Wood anticipates a moderating trend in inflation in the upcoming months. Throughout her history, gold has proven to be a reliable leading indicator of inflation. Many people were shocked to learn that the price of the yellow metal peaked in August 2020. Wood also brought up the recent drops in energy and copper costs and the price of oil. She added that as businesses work to get rid of their overflowing inventory, lower pricing may result in the upcoming months. Wood ascribes the recent decline in the e-commerce focused Adobe Digital Price Index to the inventory glut that businesses are currently working to resolve. She believes that innovation, especially technologically assisted innovation, deflates, but as Wood noted, it's a positive deflation. Wood has a different assessment of the U.S. economy than Fed Chairman Jerome Powell, who said in June that he does not believe the country is in a recession. Nonetheless, lagging indicators like the job market and inflationary data like the CPI are the main things Powell and the Fed are worried about. This suggests, in Wood's opinion, that the Fed is unlikely to declare the economy in a recession until it has materialized. Rather, Wood relies on leading economic indicators to bolster her forecast of a further downturn in the economy and a reduction in inflationary pressure. If you look at initial unemployment insurance claims, they're up 50% from the low, so I do believe we're going to see some significant disappointment in the employment numbers moving forward, Wood stated. In addition, copper prices have dropped sharply, indicating economic activity, while gold prices peaked in 2020, a crucial predictor of inflation. These are all indications that inflation is about to decline. It will decline dramatically, and there will likely be some deflation, according to Wood. Wood claims that the flagship fund of ARK Invest has bottomed, and this might pave the way for a respectable recovery period going forward. Typically, growth stocks will outperform as we move towards the end of a bear market and the end of a recession because they are the new leadership, Wood stated. It looks like we've bottomed on an intraday basis based on our flagship strategy on May 12th. The S&P 500 and NASDAQ 100 hit their all-time lows this year around 1 month before the bottom of ARK's flagship fund. That's an early indication that we might be turning a corner here, Wood stated. Given that the flagship fund of ARK Invest has dropped by about 70% from its peak in February 2021, this would be welcome news for investors in the company. But Wood might not be out of the woods just yet, since a few weeks ago earnings and an SEC inquiry caused significant declines in some of her biggest holdings, including Coinbase, Teladoc, and Roku.